This is Shelley Craft coming to you live on SNNLive. We're coming to you live from the Sprott Symposium 2018 here in Vancouver, BC, Canada. I have with me Daniel Major of GoviEx Uranium. It's a publicly traded company. I'm going to give you two symbols. It's GXU on the TSX-V and GVXXF in the US. Daniel, welcome back to SNNLive.
Shelley, always a pleasure. You're one of my first stops.
Good to have you. Now let's get started with a brief overview of GoviEx and we'll move from there.
Yeah, absolutely. We are a uranium explorer developer, only in Africa, one of the largest resource bases of uranium resources. The key to us, though, 2 permitted projects ready to development with the improving uranium market. Strong shareholder base. We have Cameco, we have Denison, we have Ivanhoe Industries as major shareholders.
What's some history behind the company?
Oh, gosh. Company was formed in 2007. Since then, we did 650,000 meters of drilling in Niger, took that project all the way through to getting its full mining permit, its environmental permits. We've been working on the debt. We're working on optimizing that project. In 2016, we did a deal with Denison and took all their African projects from then. Now we have Mali and Zambia. In Zambia, we have the Mutanga Project, already permitted. And last year, we added another project down there by consolidating assets owned by a company called Africa Energy, which now gives us 3 mining permits in a row with 140 kilometers of strike length down there.
What's unique about GoviEx?
I think the uniqueness really is that we are very much Africa-focused on the way. And we have more than one project. And I think those are the 2 biggest factors that most companies you look at are in other jurisdictions, but most are one-trick ponies. We're not. We've built a portfolio which is very much focused on development.
What's GoviEx's competitive advantage?
Africa is actually one of those competitive advantages. As I said, we did our mining permit in Niger. That took us 6 months. If you want to permit in North America, you can be doing anything from 10 to 15 years of permitting. So if any investor thinks the uranium cycle is going to turn, yeah, you can hold a nice uranium company in Canada, but you're waiting for 10 to 15 years of permitting in front of you before they're going to actually get any cash flow. Whereas in GoviEx's case, we're already working on the debt. We're working on finalizing the feasibility study. We're going to be generating cash flow into this improving uranium market.
Does politics come into play in Africa?
I think politics comes into play in any jurisdiction you're operating. It doesn't really matter where you are. You're dealing with a set of political issues that you have to deal with. As I point out to investors, if you're an iron ore operator in Australia, you suddenly hit for $1 a ton of iron ore shipment. If you're dealing with EPA issues and changes on EPA in the US, it affects you. Everything is different. What we are looking at is the countries that are reliant on exports of commodities, and therefore they are very focused on commodity development. Unlike if you're in a Western jurisdiction where it's only 5 to 10% of their GDP, it's not a big issue for them. So you've got to be particular. We like Niger. We like the fact that they have a very standard tax law and one size fits all, which is really useful. Zambia is very focused on diversifying out of copper and looking for other commodities development. They put a lot of infrastructure spend in. That suits us. Probably the most complex one we currently have is Mali, but we're right over against the Guinea border. But more importantly for us, that's the last one on our list as well. So we've got a lot of work left to do there, but by then we'll have already had built 2 mines and be producing uranium. So I don't need to worry about those risks at this time.
Let's talk about offtake agreements.
Yeah, well, we've started looking around at that part of the process. We're trying to tie the offtake to our debt. So we're looking for a very conservative, structured program. So we will start with the big off-takers. They're going to be your big French off-takers, your Chinese off-takers, your Russian off-takers. Those are going to be your major buyers because they're the biggest buyers that are out there. Interestingly enough as well, once you start talking to them, they actually syndicate together. Nobody wants to take 100% of a project. They're all happy to work with each other. So certainly if you can get someone like an EDF to come in first, they will actually reach out to the other players. The US is obviously another player for us. We're not particularly worried about that because the US has actually got a very strong relationship with Niger. We have US military, for example, in Niger at the moment.
We saw you last year at this event. Any updates?
Well, yeah, the first one was we did the Africa Energy deal. We then put the PEA out for that project. That was then the Mutanga Project where we consolidated projects together. That was exciting for us because it showed we had an all-in cost exactly the same as Niger. It was another £2.5 million producing asset. Actually, it's got a higher IRR than Niger. we will focus on Niger because it's actually the lower OPEX at $25 a pound. My target, incidentally, for the next round of FS is to push the cost down of CapEx and OPEX in Niger by another 10%. We'll see where we'll get to on that. We've got rid of the Toshiba debt completely now, so we are now debt-free. That's important because, of course, there's no security on our assets anymore. So now as we go into the more structured debt for the project itself, we're working with a clean slate. As go forward. So we've been doing more technical work. We've shown that the use of membrane technology in Niger will reduce our OPEX considerably and our CapEx considerably. So I'm starting with a good base there to be brought to. So, we laid out for Niger, for example, that we had 4 areas that we're going to focus on. One is optimizing our project, one is debt, one is the offtake, and then the equity side of it. And those are the 4 things we just keep working on all the time. We can do them at relatively low cost at the moment until we need to crank it up with a rising uranium market. But that's all we do. 4 things, keep doing them and keep doing them on and on and on.
Daniel, what's your background?
I'm a mining engineer. I've worked in Africa, I've worked in Russia, I've worked in South America, I've worked in Canada. I've mined gold, I've mined copper, I've worked in diamonds, I've worked in timber, moly, manganese. I've been all over the place.
As a public company, tell me what you can about growth drivers.
Well, the growth driver is fairly obvious from what we've just been discussing. It's all down to our ability to build those projects, take this company from being developer to actually being a producer and get the re-rate that goes with that. And I think that's important for investors when they're looking at it, because the best performing stock in the last cycle was a company, Paladin Resources, who's still out there, but what they did in the last cycle was build 2 mines in Africa, and they outperformed everybody else. So we just do what we're doing, which is to keep that project moving forward, get it built, get the cash generation, and get the re-rate that goes with it.
Daniel, let's get your website out there for our investor audience to get more information.
Absolutely. Straightforward, GoviEx.com.
Ladies and gentlemen, Daniel Major, GoviEx Uranium. It's a publicly traded company. I'm going to give you 2 symbols. It's GXU on the TSX-V and GVXXF in the U.S. I'm Shelley Kraft. This is SNNLive. We're coming to you live from the Sprott Symposium 2018 in Vancouver, BC, Canada. Thank you so much for coming on to SNNLive.
Absolute pleasure, as always. Thank you.
You're welcome.